Okay, everybody, welcome back to the Morning Edge webinar. Rod says, what news source you use? It's the Reuters feed. Jess says, Draghi's news at 15 a.m. Eastern, and Carney's going to be, we'll go in and cover that real quick. I just want to cover something from the, says, the Bank of England's monetary policy announcement is due today. So we just got that, along with the bank's quarterly inflation report. Further, the bank's governor, Mr. Carney, is due to speak today, we believe. Finally, Prime Minister May is expected this week and perhaps even today to publish a white paper on her Brexit plan. This is all very much up in the air at this point, but the one thing we are certain of is that the bank will increase its inflation forecasts, leave Mr. Carney to assess the situation made all the more confusing by Brexit. I don't see that they haven't necessarily increased their. Now, that was from the Gartman letter, and actually the Gartman letter is pretty good because it gives you a good overall kind of narrative. You don't have to agree with it, but they give kind of a nice narrative that you can say, okay, I know a lot of people like to poke holes in him, but it's a good narrative overall because they follow across the spectrum, everything. So it's, especially if you're not familiar with all these, not only like the Bank of England, but some of these other smaller central banks. Hang on. Just a minute. Okay, so we're seeing the cable come back up in here. We talked about 25.95 be a good area to cover. 25.94 is at 38%. Obviously, they pushed them a little bit harder. Guess they figured they had a lot of people long, and also I guess they was long ago thinking a lot of people might be saying, "Man, this is as good as it gets. Let me cash in my chips." So I guess you're able to even push it even further. Hang on for a quick second. Okay, so we're seeing it come back in, or come back up. Let's go on here. One of the markets that did rip overnight, was the gold market, and this is on this whole thing with the weaker dollar. Like I said, we talked about. I can't stress it enough. Is that I said and that we saw a little bit of, they mentioned on the Reuters story. There are so many big bets placed on the strengthening dollar for 2017. So when these comments came out, now people are saying, well, wait a minute, I guess the dollar really is overbought. The euro is way oversold at this point. I guess we could get a correction. So what happens is these banks, and we mentioned this not yesterday, but day before yesterday, now people got to start to think, okay, now I got to kind of reverse my position. Maybe not reverse, but they have to allow for that. So I have to lighten up those positions. Say, well, now I got to factor in a move back up, and I'm sure I guess some will jump on the trade. But basically, a lot of this is going to be, short covering. We saw that. I mentioned to y'all, this was not this last July, but the previous July when the euro. We showed the chart. Let's go into that, and we discussed it yesterday. Kind of gives you a good narrative overall. Okay, there we go. It was actually in August. This is when, and I was trying to remember what prompted it. Now I remember, because we saw this a ton of short covering in the euro, and this is when China was having all kinds of problems. And this is when the Hong Kong market was falling apart. The Chinese market, I'm trying to think which the name of it, can't think of it right offhand. But it had been rallying like crazy. Everybody was jumping into the market. In June it topped out, and then it started to slide really quick. And it started breaking levels. Then worries came in. Everything was overdone. And what happened was, you saw the euro. You can see here where it broke this trend line, came back to basically test that same area. And what happened was, a popular trade was selling the euro, because of, remember, the ECB's been on this, cutting rates and their quantitative easing since Moses crossed the desert. It seemed like, because it's way back here, and here they are. They're still cutting rates or trying to do what they can to prop up this eurozone economy. So anyway, that trade started getting unwound. And you can see where this market went from sub 110 all the way up to 117 in about 2 days, 700 pips. And really, this wasn't the start of it. It came in on this day, and it's like when we got above, I guess it was right here to this 112, and that went 500 pips in one day. I mean, it was just like crazy. And so you can see how things can change very, very quickly. And so what I was saying is, so many of the big banks had positioned themselves for the stronger dollar. We got the talks all over again about going to parity, we're going to 98, we're going to this, and all this other stuff. And we're talking about that because we thought not only had the euro held up well, but I was saying I think the best it can do on the very short-term basis was going to be like, I think I said 295, because that was like 161%. And I thought, okay, well, they can rally them up, and then if they're going to take them lower, then fine, they'll eventually take them lower, but they're going to have a pause here. Well, things change, events change. That's why I always think it's crazy when people try and forecast. I used to try and forecast, and you get nothing but a bunch of headaches, and nobody really cares what you called on what month. I mean, I told people, I had that interview, and the crude oil was trading at 26, I think it was 26.71. I think it was 26.71. I was saying, okay, the low, 161% is at 26.15 with another fib or something like that, 26.04. And I think like the low, I think I missed the low like what? And I wasn't looking for a massive bottom, but a bottom for them to bounce. And that was like the low in crude, missed by like what, 10 cents or something like that. And there were some people that were calling for $15 and $10. I don't hear anybody saying, man, I still remember that amazing call, that amazing bottom in the crude that you look. Nobody cares. So what the heck is the point of even forecasting? Not only it closes your mind, does it open you to seeing where a market can go to, because you're so hell bent mentally to defend. Wait, I said the euro would never go past this price, so you're not willing to look at any constructive bullish action. You're going to be thinking of everything is terrible. So that's what I'm saying is why quite often I just look at the levels and look at it moving from level to level. If people want to laugh and say, oh my God, you have too many levels. Okay, whatever, dude. Do it the way you want to do it. I'll do it the way I want to do it. So, like we were looking at the Aussie dollar. I'll give you an example of that. I was talking to some guys earlier in the European session. And one guy was saying, God, what do you think about the Aussie? And we'll load it up here. And my it locked up, and I missed this. Let me show you where it makes me mad that it's not there. Actually, let me go to my chart here because it was saved there. I lost my. Here we go. Okay, there we go. And that was 78.24. Okay, so here we go. We have to back it way up here. There. I had this chart written, and then I accidentally shut down my, I accidentally deleted my Japanese yen chart. And I always save my work, so I just opened up another workspace, but I didn't have my work saved. I hadn't saved it, so when I opened it up, it didn't have these levels, and that's 77.31. Go back in here. I think it's, but I'll move it. But I already had the levels in place. $77.31. That's where I was coming. Right there. And I don't know what I was looking at that point. Maybe. Okay, we'll move it like this. And this was 78.24. So we'll mark this off. Go. And this was 77. Hang on one second. $77.31. Okay, make sure we got it marked off. I already made this chart, but like I said, I accidentally deleted my dollar yen chart, so I had to load it. And unfortunately, since I hadn't saved the other workspace with the data, I had to load that workspace, and this work had not been saved. So let's go over here. This here. Okay, so here we go. So we had been watching the Aussie, we were saying, hey, you got to be careful the way it rallies, blah, blah, blah. And then we did the homework here. We talked about that, a broken down cup and handle. We got up here, we had some levels, and we talked about this. And we talked about 75, 72, and it pulled back, and everything looked right for a correction, okay? And yesterday we had this resistance, we even had this 76.30. And when I was telling the guy, he goes, what do you think about this Aussie? I'm like, well, look. Once it cleared 76.30, the doors were wide open, and my take was, because now they keep, with the Trump administration bashing the dollar and talking about outright devaluation in the sense that they should. He said the U.S. is a bunch of dummies for not devaluing like everybody else. So he hasn't said we're going to devalue, but the suggestion is there. That hey, this dollar's way overdone. So I said, hey, look, once we got past, because we were looking for potentially right here for this market to go and break down to a correction right here. And we said, hey, look, you don't want it to close above 75 right here. And it did, and we slid back, whatever. But now with this FOMC and the market's turned around, this 76.30 was resistance. When, as I told him, once you got past the 76.30, the doors are wide open. So my take is, with this whole thing, with the dollar going lower, we're going to 78.24. And we'll back up the truck and see where 78.24 comes right there. You see that? I don't ever go with the highest tick. I just go where the volume is. So to me, it looks like we're going to 78.24 with a pause at 77.31. Because you see what's happened is anybody was short, they should have been on the smart side in the sense is get the hell out of Dodge. Once you got above 75, 70, once you got above 75, 75 on a 2-hour close, okay? So there's no reason why people should have been short. We were looking for lower prices. We did initially get, I think, 60 pips and 80 pips or something like that. And you see here, here's our first foray right here. Right here, and we pull back, okay? Then we come back up here, and we're not able to close above it, so everything looks still good. We come back here, we get this little mini hammer bottom, and we come back to 75. You can see, this is working like, a fortress, like frickin' Fort Knox, you see? It's just, you're just doing the technicals, that's all you're doing. Now, I like to look at the theme of the day, what's happening, blah, 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 but this is just straight up frickin' fundamental, technicals, okay? Look at that. So you keep coming up here, you come back up, see it. Once again, the fortress, the freaking Fort Knox. They can't get through that thing. They keep coming up here. So you're saying, hey, look, you know, yeah, that's good. I'll just take a little bit here, then they rally back up. As long as we don't get above 75. And that's what we've been saying for a 2-hour close. Once we got above it, okay, you got to get the hell out of Dodge. So you come back here and you go, wow, we came back below 75. Now look, right now, the shorts is now covered, so we have to see what happens. We'd have to see a pretty big reversal now if you try to put the trade back on. So we're seeing it dip below. It got back below it, but there's not any follow-through. Well, yesterday we get the FOMC, and then, of course, Trump's already bashing the dollar. And then we got a record trade surplus, which I'll go over that real quickly. Hang on. I think I already jumped out of that. Hold on. Let me see if I can find it. Because that one's important. Okay, here it is. Okay, the Aussie added to gains in Asia to stand 1% higher on the day, driven by a recovery in exports in the fourth quarter. Well, that's not any news. We've been talking about 3 months of back-to-back-to-back, gains with coal. So this shouldn't come as a surprise. But I don't trade the Aussie. But I'm saying is, you want to have that stuff. You want to keep that stuff in your back pocket. Saying, oh, you know what? They've been having those great gains back-to-back. Although I thought we were going to come into a correction. But I'm saying is, when they were going to come out with those export figures, it's not like you should be surprised and go, oh my God, I'm shocked that they had such great exports. We've been seeing that, and we've been covering a story just last week about other exports, and we mentioned the coal again. Anyway, it says, driven by exports in the fourth quarter, it sent its current account surplus soaring and hadn't off any dips into a recession. Now, here's a key thing. It says the trade, well, not this part, I'll tell you later. The trade balance has turned from the odd of 3.8 billion deficit in Q3 to a 4.8 billion surplus in Q4. RBC strategist Elsa Lignos said, a technical recession in Australia is now unlikely. Here's the thing, and that's exactly what I was going to lead to about this. They're thinking that the RBA may eventually still cut. Cut, at this point now, if you see those record numbers, let's not go overboard and say they're going to be raising, but I tell you what, they ain't going to be cutting anymore. You see what I'm saying? So that opens the door for this higher. But anyway, getting back to the technical play, like I said, so this opened the door for them to really go higher. So now anybody that was, we were looking for shorts here. You remember saying, hey, look, this is a great area. I think on this first run up, it got up to like 75, 75. Oh, our level was 75, 75. I think it topped at 75, 76, and we saw a pullback here, 4, 4, 4. Now when you look at it, you say, well, wait a minute. This whole thing's been negated. We've already met our targets, but this thing looked like it wants to go. You got Trump bashing the dollar. People weren't happy. They thought the Fed statement wasn't strong enough. And then on top of that, you got record exports. Holy smokes, this thing ain't going to stop. We already know. Now you say, okay, and this is what I'm saying about recognizing what's going to happen. Now you say, you know what? Hey, we were looking for a correction. A lot of things have changed. We've already met these levels, and it should have gone to correct. We thought it should go and correct. And like I said, you can think all you want, but if a market doesn't want to go down, then you have to start looking at it openly the other direction. So you say, wait a minute. So the Trump advisor gets over there and says the dollar's way overvalued. We're a bunch of dummies because we're not playing the devaluation game either. Trump goes in there and even bashes it even more. So it looks like he's going to be relentless. We get the Fed. They weren't even happy with that statement. The market is. And then you get massive export sales. So now we're looking to 76.30. Where do we go? And that's what I'm saying. I think the door's wide open for 78.24 now. And there's a 78.24 at the top of the frickin' mountain. I mean, there's way higher levels from way up, and we can always look at those later on. You see that? But for right now, it's 78.24. Is the overall target if we're going to make this move higher with a pause at 77.31. There you go. So we'll put 77.31. We got to get the bias chart up. We haven't even got to that, but we've seen some big moves, and we're coming at the end of P. It's better, I thought, to take an overall look as to what's happening, not just throw out a bunch of levels. But because we're seeing a change, we're seeing a material change. All these banks, and they got a whole lot more money than any of us could dream of, they've made those big bets on the stronger dollar for 2017. Now these big banks have got to turn the ocean line around, start going the other direction, or at least turn the ocean line around for just a nice little correction. So right now here, it's going to be 77.31 because we're looking further out. That's going to be the target. And then support on this Aussie has got to be this breakout point, 76.30. In the euro, well, here's our thing up here, remember? So we got the trifecta here. This is, remember we talked about this, we were saying we liked the 716, we said 715 was the area where you'd see a good pullback of 125 pips. 125, 135, we got just that. Although I thought we'd get to 605, but like I said, a funny thing happened on the way to the pavilion. So, and we said, hey, once we get past the FOMC, and we might even dip to 568, and that's going to be a good buy, and then we'll see what happens. Can we go? Well, like I said, a lot of things have changed since then. So you have to just go with reality. Just like one of the guys went smart, I think it was a week ago, he goes, and trading in FX, and I guess any other market, in FX especially, you have to be willing to adjust. You know what I mean? You say, wow, you know what? The terrain has changed. Now we got to go, go with what looks like the market wants to do. So we talked about, oh yeah, we might get up to here and take out this, and then we see a more measured pullback, blah, blah, blah. Well, it looks like that's where they're going to go to now, and I'll tell you what, I'm surprised as heck. There's no way I would have thought that the euro would have been up here ahead of what's going to be likely a very good NFP. But it is what it is, and that's where we're at. And I'm thinking is, well, we have to go and pull back. And then we were talking about 716. Well, I think it's going to be just like the story said. I think it's going to be very volatile, so I think you have to have your levels, and you have to be reasonable. When I say reasonable, I think like if you get up here, and let's say you were long the euro, and you say, wow, this is a great level area. I'm taking off my longs. Then don't be crying if we get up here to 9 and you're saying, I just can't take it anymore. Let me put my euro longs back on. Because I think what's going to happen is you'll come to these levels, and just like the story was saying, I think there's it's going to be volatile, and it's kind of not the same, but kind of like, remember we talked about that as an example earlier this week, how the gold got up there. Nobody didn't get to jump on the train, and while we were looking for a pullback of the gold to 1180, and we got to that area here then on the Feb gold, but in the April we got to, what was it, 1182 or whatever. Well, it's a little bit different situation with the euro. It's not the same as it was in the gold market. That being said, we have a lot of people, a lot of big banks, big money that are on the wrong side of the railroad tracks, or they're on the train going south, and the train's going north, and they got to get on the train that's going north. So they got to dump their positions, and so the market knows it's got an underlying bid tone. So I guess they're going to try and get people to pay up. Yeah, I mean, you just have to go with what the market's willing to go is telling you. You can't, I can say, which I was thinking, oh, we're probably going to come back here to 716, and we're almost time. We're actually a break here. So for right now, the resistance is going to be 875. That's it. We're just even though we got, well, let's just say 872 right here. It's 161, but we got the trifecta here. So it's 872. Actually, we do have this area. I'll leave it at 875. It's time for a break, and we'll be back. Thanks for joining us here on the Morning Edge. We'll come back and go over everything today. This is more about setting the tone, because we're seeing a material change in FX with the dollar look like it's going to continue to weaken. I think we'll still see the dollar strengthening going into NFP, but looking outward so that people have a general idea of how are we going to go in and trade this. Maybe we're going to have to be a little bit more aggressive in picking up the euro when it pulls back. But we'll be back. Thanks for joining us here on the WizeTrade webinar.